The divide between the rich and the poor has never been worse. Thanks to central bank policies, the globalist elite have been able to ensure their hegemony and keep existing functions in place. No changes will be made to the system, which is a trap for us all to fall into. With interest rates at record lows globally and economic growth slowing down, the question remains, how far are central banks willing to go to prevent a crisis? You came here for the truth, so let me unveil that for you. Today, we are going to look at what is happening with QE4. I'm going to show you that this is officially QE4. It is really written in stone directly on the Fed's own website. I'm going to talk about the balance sheet as well. I wanted to also focus on what Ray Dalio and Paul Tudor Jones were talking about. They were on stage. I actually watched this presentation and they were discussing back and forth quite casually. They brought up a few things, and so I wanted to quote from that because the mainstream media basically did not cover it in the way that they should have. They left out all the juicy details and they talked about all the things that largely do not matter. So we're going to get into that, and I will give you the link, of course, as always, in the description if you want to check it out for yourself. It was about 30 minutes long or so you could put it on in the background and listen to that as you're doing other research. And then I wanted to show you some other issues. I've got charts, I've got articles, I've got everything in between, so let's get into it right away. The Federal Reserve's balance sheet has expanded once again. So I talked about this in the previous week and the one before that. So what we had was the Federal Reserve's balance sheet expanding. We've been seeing this now for weeks on end. You could see here as they began this QE4, and then we had an actual contraction of the balance sheet. And I said that this was very unusual and likely it would continue upward just because of the actions that you're taking. And you can see that now it has expanded to a level we haven't been at in quite a long time. So we've gone prior to all of this QE4 starting and so on. This just takes us back into the pace that they were at, which is in fact faster than QE3. So we know that this is a program that they are designing to keep in place at least into 2020. That's what they say. Now this next chart is in conjunction with this one here. And I brought this up in a video previously. The video was seen by very few people, but for my subscribers who check in every time, you know about it already. This happens to completely correlate with the S&P 500. And you could see that on this chart. Weekly change in the S&P 500, and at the bottom, weekly change in the Fed Reserve's balance sheet. And isn't it interesting that they basically correlate? Of course, it's not dollar to dollar. It's not perfect, but you see the general trend. So we could see the same patterns that take place. Look at this every time, right? You will see that over the weeks we watch the same patterns being applied. Is it interesting? Is it a coincidence? I really don't think so. And of course, it doesn't necessarily need to be the Fed's balance sheet specifically. We can have central bank balance sheets going in this direction because the world is awash with money. All right, now this happens to flow sometimes into equities, sometimes into real estate, sometimes into bonds, could be in other assets as well. Right now, we are definitely seeing the bubbles appearing in equities and real estate in certain areas. We've seen a slowdown in real estate in other markets, but largely it has been pumped up to a great degree. In that presentation, you actually saw Paul Tudor Jones mentioning the fact that he thought it was funny when Jerome Powell mentioned that there were no excesses, no bubbles going on. Now, this is a very intelligent individual, an investor that has, one of the best track records that we've ever seen before in the investing world. And he knows what he's talking about. He's seen different Fed presidents over the years, their speeches, obviously paying very close attention for decades. And he is correct in this presentation of what he said. I do agree with that. Of course, there are excesses. Of course, there are bubbles. And that's just the way it is. Now, directly on the Federal Reserve's website, specifically the New York Fed, you see this information: Treasury, securities, operational details. And if you want to know what the Fed is up to, at least on the surface level, they have it all listed here. Now, not specifically with the repo operations, but we can go in a little deeper. And if I zoom in here, we're going to see the monthly details. And you could see on the 1115 right here, it shows you the desk plans to purchase approximately $20 billion in reinvestment purchases and an additional approximately $60 billion in what they call reserve management purchases of bills over the noted monthly period. Okay, so that's what we have. And if we click on the button that's next to it, the schedule, it will open up this page. And you could see all the dates, everything's listed here, the maximum purchase size, everything you need to know. And you will see at the very bottom that we have everything, and of course all of the billions of dollars, whether it is the treasury coupons that show you the dates there, going out in some cases all the way to 2049. We know what this is. Call it whatever you want. Call it organic growth of the balance sheet. Call it reserve management. I really don't care. From now on, it is QE4. Now let's flip the page over to what we saw in this particular presentation with Paul Tudor Jones and Ray Dalio. Now, I wish it would have gone on longer, and I wish they didn't veer off into the directions that they did, but I'm going to try to distill this down, particularly with the quotes. I'm only going to mention a few things in the couple articles I'll show you from here specifically, because they didn't get into the juicy details like I said. Take this as an example. Dalio lambasted widening wealth inequality, the effect it was having on political discourse, and the response from the major party candidates, many of whom have embraced an expansive view of government intervention. This is largely the direction that they were heading here in this interview. Started to veer off in different directions, but I would really have wanted these news articles to mention what I believe is more important. But let's take a look at this for a second. Governments and central banks from Japan to the US are taking steps to stave off slowdowns amid international trade tensions and increasing recession fears. Jones, the founder of Tudor Investment Corp, said low interest rates and budget deficit spending will be a boon for the markets. I just look at the fiscal monetary mix. It's the most stimulative that I've ever seen. It's no wonder that stock markets are hitting new highs. It's literally the most conducive environment, certainly in the short run, for economic growth and strength that I have ever seen. And he's not saying it as a benefit like this is fantastic. He's actually worried about it in the long term. But they don't do that in these news articles here. They clip out what makes it look fantastic, what makes it look good, because investors are only caring about the short term. That's just the way it is. At the bottom, because the world is looking for a yield or something, companies also can sell dreams rather than earnings. So the number of companies that produce earnings is the lowest since the dot-com bubble in terms of their need, because you can sell the dream. And he gives you some specifics, gives you the numbers here. It wasn't like this 50 years ago. We've gotten completely out of whack. He talks about that. Definitely check out the video, which I'll link in the description. I just thought it was interesting to see two people at such a high level, both billionaires, both widely connected, obviously, both very, very successful in what they have done over decades. And they're actually mentioning a lot of what I have over the years. Now, I need to interject my points right now before I forget. So let me just quote a few things from what they said. Wealth gap will bring about revolution. This was Ray Dalio talking about the fact that because of the wealth gap that is present today, people are going to take to the streets. We're already seeing that in so many different places around the world, but you have an upheaval that takes place and it lasts maybe a month, maybe sometimes it's 6 months, but ultimately it fizzles and goes away for one reason or another. We've seen them happening historically many times before. However, as the wealth gap gets worse and worse and worse, we will see this becoming more common, and we will see it become more exaggerated. He was literally warning everybody at that moment, but he kind of veered off, took another direction. I wish he would have stayed on that. In his post on LinkedIn, I don't know if it was the last one he did or the one before that, but ultimately he goes deeper in that one if you haven't seen it already. Effectiveness of monetary policy is finished. He also mentioned the fact that, look, they're pushing so hard. Number one, central banks go and they try to reduce interest rates. Then he said they go in with the money printing. And number three is basically to go with helicopter money. Whether we go into the MMT or, however they approach it, he basically just suggested helicopter money. That's a quote from him. And that is, of course, not good in the long term. He also mentioned, quote, Europe is dead in the water, Japan is dead in the water. I believe it was Jones who actually said that, but regardless, what they're talking about here is basically the fact that they've pushed themselves into negative interest rates and they cannot get the growth that they want. They put interest rates all the way down into the ground and below. They printed up trillions of dollars worth and they still cannot grow. That's when you know the system is broken. And I'm so happy to see somebody at this high level. A lot of attention is going to be on this and they are actually speaking the truth. Jones also talked about much bigger deficits. In fact, he really focused on that and suggesting that this is just not economical in the long term, very big problems. And then he also mentioned the unfunded liabilities. Quote, we have a lot of IOUs. That is very clear because this is an unsustainable policy where you can run deficits, you can go into the maximum amount of debt. You have problems on the corporate side as well. Individuals are in every form of debt imaginable. All of this leads to a disaster. It doesn't lead to a disaster today. Doesn't mean the stock market drops tomorrow. It all is a matter of the actual economy. And that's why I call it the global economic collapse. If you read that book, you flip it to the back, I said, soon the earth will rumble under the heels of the angry mobs. And when you put those two together, what's written on the front and what's written on the back, it's exactly what Paul Tudor Jones and Ray Dalio have warned about right here. According to Jones, we've got a 5% deficit coupled with the lowest real rates that you can image with the economy at full employment. That's the most unorthodox and potentially explosive combination that you can imagine. We've covered that so many times before, just glad to see it mentioned here. I thought this was interesting because you had the managing director at Rockefeller Capital Management saying this: technology is just booming right now. I think we're in about a 30 to 50-year technology boom period that we'll never see in the next 500 years. So let's take these two companies, which are very, very positive on growing earnings and margins, and I like that they're leading not only the technology industry, but they're leading the market. Talking about Apple and Microsoft. And we see these type of quotes all the time. Whoever is the most bullish gets the most amount of attention, gets the most amount of clicks and likes and investors and interviews and book sales and so on. This behavior here is always ridiculous after the fact when people say things that are so stupid, that are irresponsible, to suggest that you don't even know what's going to happen next year and you are already talking about predictions 30 to 50 years down the road. This foolishness should not be accepted, but yet it is, because it's good for business. It's good for advertising. Late cycle, record high discrepancy between corporate confidence and consumer confidence. I've talked about this before. Just wanted to give you an update on it. This is the conference board CEO expectations minus consumer expectations. And of course, we see this through the cycles. Whenever it gets to this point, a recession is imminent. Now, whether that means it's going to happen tomorrow or next year, I don't know how far this will go. They're trying to stave it off with their monetary experiments. That doesn't help the economy. We know that. We already determined that because of what happened during the financial crisis. This is a big failure, but there's another reason behind it that many people don't want to hear about. This is the inflation people should be looking into. I always hear about the fact that, well, there's no inflation, so we don't have to worry. Look at healthcare inflation. It's running at 20%. And the CPI, health insurance, 20% year over year. Absolutely skyrocketing for people right now. And that is very bad because if there's a large group of people who need something like this and they got to pay big money for it, I don't think their paycheck has increased 20% year over year. Probably not. Probably not for most people. Then look at this. South Korea exports year over year. This is usually seen as a leading indicator for the entire world. And I've been following this now, and you can definitely see the trend. Not just looking at what's in the contraction. I mean, clearly from 2017 into 2018, the trend has been less and less and less, and now we're in this contraction mode. Same had appeared 2015, 2016, as we have talked about before, just like Janet Yellen had said that she parallels a lot of what we're seeing today and 2015, 2016 time frame. Is not just, South Korea exports, but we see it in so many different factors. Here you can see Korea's exports by destination, whether that's China, the US, Japan, Europe, and all others. Of course, this has been a big problem over the last year or two, and it's not just one or two countries. Of course, we see the general trend of the world slowing down. Introducing QE4 is not going to fix the problem. And continuing our trip around the world, I got two more for you for my friends in India. India's economy is in a very deep crisis, witnessing death of demand, and the government is befooling people by its brave talks that the growth would be better in the next quarter or the one after that. That's according to the former finance minister. This is not just some random analyst out there. This is a person who obviously knows what's going on to some degree. You could read the quotes in here. I know I have so many people from India all the time asking me to put some information related to India. So obviously when I see something like this, it has to be included. So you can see what he said here. Just like with so many other countries, India is slowing down. Now, obviously the growth is higher than what you're going to see in Europe, for example, but slowing growth isn't good because they can't keep that up. They need constant and never-ending growth that only gets better and better, which of course is unsustainable and impossible. There are going to be contractions in every country all along the way. What they are trying to do is trying to stimulate to actually prevent it, but it only makes it worse in the long term. This is just the way it works. Now for Macau, their casinos showed further weakness in November as the world's largest gambling hub heads towards its first annual revenue decline in 3 years. The details are in here. Obviously what we have is a problem in Hong Kong. We got issues in China, and globally we have a slowdown as well. All of these coupled together, and they show you in this piece of information, which I would consider like a second or third tier type of data. People aren't going to get that. They're not going to pick up on that because they're looking at the US U3 unemployment. They're looking at all that other garbage, of course. Never going to piece together the puzzle if you don't look at this type of information. That's all for this video. If you found it informative, hit the like button. I do appreciate that very much. If you want to build a business, if you want to learn how to sell on Amazon, I have a free e-course that teaches you everything you need to know. It's available at the AmazonGPS.com. If you want to learn about the financial system, if you want to understand the 4 asset classes, the benefits of each, all the details of this are located in these 2 books. Check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Solutions. You heard what the issues are, but what can you do? What can we do? And I have an entire playlist that I have been creating over the years, over the months, with so much detail, hours and hours of information in this playlist here and others. Click on it and I'll see you there.